The dollar versus Canada moved higher yesterday, and in the process moved back into the red box. That red box defined a trading range going back to December before all the volatility from the tariff news in January. But it broke to the downside a few weeks ago and is now moving back within that red box. I'll talk about the tacticals that are driving this currency pair and what that break back into that red box means from a technical perspective. So let's get started. Looking at the 4-hour chart, this is the red box I speak of, and if you look through all this period right through here, the price for the most part stayed within this red box, trading higher, lower, lower. We did have a few little breaks here. This was off of the election news, and we had breaks here, which was off the actual tariff news that led the dollar versus Canada to the highest levels going back to early 2000s before quickly rotating to the downside as Trump took away the 25% tariff, which, by the way, is going to seem to be going back in again. We'll talk a little bit about that later. But the low price came down to the low of the red box here until a few weeks ago, where the price broke outside of the red box with momentum. We saw the price move lower. Since then, the price has waffled higher and lower, with the low price from last week coming down, but falling short of the low price from the previous week. And that helped to start the rise back to the upside. Trading yesterday, we moved back above the red, the low of the red area, and also above this swing area near the low price through here. We also moved above the broken 38.2% retracement of this move to the upside, and also above the 100 bar moving average on the 4-hour chart. So needless to say, there was a lot of stuff going on right here between the 1.4268 level and 1.42, I guess that's 7.5 or thereabouts level on the top side. And that helped to increase bullish bias in trading here today. We are now trading above and below the 200 bar moving average on the 4-hour chart, just above that level, as a matter of fact. And that gives the bias more of a bullish bias. But we are trading above and below the level, so there is some two-way action going on in the at that key moving average at 1.4336. Let's switch to the hourly chart. And take a look at this move to the upside from its perspective, because I think it's important. Why I think it's important is that this red box right here, that's the old red box. The price trading yesterday came up to the high of that swing area, just into the red box area, and then tried to use that level as resistance right here and push to the downside on each of these attempts right through there. But the momentum could not be sustained, and we rotated back to the upside, getting above the swing area at the lows, and then based against the high of this swing area through here. That gave the buyers a go-ahead to push higher, and we have seen that momentum to the upside. So we're moving more into the middle of this consolidation area. Disappointment is starting to enter from the failure of the break below this level. The fact that Trump may reimpose a 25% tariff on all Canada imports may also help to lead to further upside potential here, with a weakening Canadian dollar, stronger U.S. dollar as a result of those tariffs. We will see. I'm not sure we're going to get this type of move like we saw back here when they enacted the 25% tariffs and then took them away. But the bias seems to be shifting a little bit more to the upside as traders, even from a technical perspective, move back above that back into that red box and above other what was it once support, now then resistance, and now support again. So buyers are back in control. That's my technical look at the dollar versus Canada. My name is Greg Michalowski. Good fortune with your trading. Bye bye now.